All right, welcome back to episode 19 of the Cashflow Corner, along with myself, Aaron Thomas, with my brother, Jacob Thomas. We're super excited to have our guest on today, Pete Schnepp from Asset Stream Properties. Pete, how you doing?
Hey, thanks, Aaron. I'm doing great. Great to see you guys.
Yeah, thanks for carving out a little time in your schedule. I know we're getting into a busy weekend, 4th of July. I know a lot of people have a lot of plans, and we just appreciate you making some time here to hop on the podcast today. I know our listeners are going to get a lot of valuable experience from today's conversation, as Pete has a lot of experience in a lot of different areas in the world of real estate, and we can't wait to really just hop in and learn a little more about Pete's background and start to hop into some more different market trends, strategies that go into Pete's business, and really just take it from there. So I guess, Pete, with that being said, I want kind of set the table here for our listeners to learn a little more about you and just kind of take it back to square one of your journey and your background of coming up through the world of real estate. So I guess if you could just briefly share or kind of highlight some of your different background stories and where you started and how you got to where you're at today.
Yeah, you bet. So I guess real estate, my real estate journey started in construction, and my construction journey started in college. And so I did a business entrepreneurship internship where this company was a national company. They teach college kids how to start and operate a painting company. And so I did that for 3 years in college. And then after that, I got into home building. So I started working with home builders as an employee, started as like the guy that dealt with all the warranty claims and would facilitate getting things fixed as needed after the people have moved into their new homes. Then I learned how to be the construction manager and build the homes. Then I moved up to being the project manager, kind of overseeing communities being built. And I kind of rode the boom and bust that was, from really like 2004 to 2009-ish in Phoenix. So I kind of saw all different sides of things. And I was young, fresh out of college, but starting in construction, I got to see a little bit of the real estate side. I saw the people that were buying the houses. I saw the people that drove up in the nice cars and had the money. I saw the people that were buying multiple houses, and they all had real estate related. So they were the realtors, they were the lenders, or they were the business owners that had a big real estate portfolio. And so I definitely knew. And going back to college, I read the Little Purple Book from Robert Kiyosaki, and that kind of planted the seed. But when you're young and you don't have money, you're just trying to put food on the table, it's just a far-fetched dream at that point. But being in construction, I could see it a little bit more. And I was involved in working for the wealthy people. And I just realized, hey, all the wealthy people, the richest people I see, they've got multiple properties. And so at some point, I decided I need to get my real estate license. And so I did that while I was still in construction, which really helped me understand like the transactional side of building and real estate. And then at some point, after the market kind of changed with home building, I had left the company I was with and I went into business for myself. And the one thing that I knew best and the best way to support my family at the time was to start a painting company. So I started that in 2007. It's called Envision Painting. I still own it. We do roofing as well now. So it's called Envision Service Group. So I've had that for 17, 18 years. And I spent many, many years as a contractor, just grinding it out, trying to earn a decent living. I was trying to sell houses at the same time, just on the side, earn a commission here and there. And, I did a little bit of that, but that is a tough game trying to be a realtor. Props to anybody that can make it as a full-time realtor, because you probably know 5 realtors right now. Like everybody has a cousin and an aunt and a sister that's selling houses, but we were doing it on the side, and so it was just a nice little income here and there. But a lot of that business is nights and weekends, and so at the time I had newborn kids, and I was just working all the time, and so I stopped doing that so I could try to be more present with my family. but that's kind of how things started. And my first house that I bought was when I was working in construction in October of 2007 with a buddy. We got it for virtually no money down. And the next month, the market crashed. We bought a house in Chandler, Arizona, and for like $215,000. And a few years later, we finally got a short sale to go through, and it sold for $80,000. Right. And so that was my first experience investing in real estate.
First learning moment. Yeah, that's for sure.
I tried to hold on to it for a while, but it just didn't make sense to keep it at that time. But so that's kind of how things started. I mean, I saw the boom and the bust. I felt it with that first house. Luckily, I didn't have a bunch of assets to lose, but it was a lot of learning lessons. Most of my life, I've learned from other people's success and failures, like just watching other people. Mm-hmm. And so, seeing all these business owners that went bankrupt and a lot of people lose their houses, it was because they were playing the appreciation game and they didn't have enough cash flow to support that, to support holding the property. They didn't have enough other income to keep things afloat, and people were losing their jobs. And so it just kind of all crashed, right?
Yeah. I mean, for me, I feel like definitely a similar light bulb moment. I know a lot of guests that we've had on talk about that little purple book that really flips the switch, and you start just realizing, why haven't I been doing this sooner? Why haven't I not done this before? How did I not even know about this? And I feel like it's very similar in terms of investing in commercial real estate, where a lot of people don't even think that they can obtain investing in commercial real estate, or they'll see a giant 100-unit apartment complex and not even give it a second thought of knowing that it's a group of pooled investors that syndicate the property, and that's really how the deal works. And ultimately, that's what we try to get out to our listeners, that it is obtainable. And ultimately, I mean, with all the different investment strategies out there, it stands second to none against any other strategy. So I guess going from there, what attracted you to syndication versus other real estate investment strategies such as single family rentals, fix and flips? I guess just everything that kind of went into that.
Yeah, it's funny. I didn't know that you could syndicate or partner with people or raise capital or any of that until like 2023, just a few years ago. So my journey is a slow, like turtle journey. My goal really, when I started buying again, was to try to buy one property a year, all by myself. And so that's kind of, the contracting business was like the means to the end. So my goal was really to make more money than what we lived off of. And if I could, make an extra 50 or $100,000 a year, I would plow that into a property. And I started with single family because that's what I knew. So over 10 years, I built a really nice portfolio all on my own, slow and steady. And along the way, I refinanced. I pursued the BRRRR strategy or the infinite return strategy, but it was just a really slow game. It wasn't anything scaling. I wasn't bringing in partners, and it was just all with my own capital. And so, actually, just last week, I was kind of doing a recap on my real estate acquisition growth over the years. And so, from 2012 to 2022. I had bought maybe $3 to $4 million worth of property, like purchase price value. And through natural appreciation and through forced appreciation and redeploying equity, that portfolio grew to about a $10 million valuation. And that took me 10 years to do. And that was all my property, right? And I didn't really sell. I wasn't flipping. Flipping was just way too risky. I was a long-term. And I was buying, basically chasing properties for like 5 or 10% cash on cash return, mostly single family. And then I started getting into small multifamily. But that was like the long 10-year journey. And the second half of that, I was really pursuing financial freedom. So that was everything that I woke up looking for was that cash flow number. And it was great. But then I really started to, once I reached that number, I realized, cash flow is, I mean, it's really just the beginning. I mean, once you have that, it's not enough to live an abundant life with. It's enough to get your basic needs covered. For me, that number was 20 grand a month that I was chasing. And once I got there, it was nice, but it's not enough to like really do the stuff that you want to do. But it gave me a great safety net to pursue bigger stuff. And so in 23, I started, I realized, hey, somebody said, hey, if you raise capital, you can do more of what you love, and you've already proven that you know how to do it. So, start learning how to raise capital. And so I reached out to some friends and family and started going down that route. And in 23 and 24, the market had shifted, the rates went up, and all of a sudden there was not a lot of competition buying, which I loved. I mean, everything was on sale essentially. And so I was like, well, I'm going to start turning this up. So in those 2 years, I bought $5 million purchase value of real estate in 2 years. And then in 25, this year, since the beginning of the year till June 30th, the first 6 months, I've bought almost 11 million in real estate. And so it's been a pretty nice scaling. Now, I am raising capital. I'm doing a lot of JV deals and even just retail investment. But it's also a sign of me really just focusing. I'm no longer like my contracting business. I got out of the day-to-day in that a few years ago. My team runs it. And so it really doesn't take any of my time. So I've just been 100% laser dialed in on what I feel like makes the biggest impact in my life, which is acquiring real estate and bringing in strategic partners and relationships.
Yeah, no, I love that. That's a great story. Just kind of walking through your process and your journey of, starting at those single family homes. I feel like that's where a lot of people, when they first entered the world of real estate, that's kind of natural for everyone to kind of gravitate towards that space. And as you go throughout that process, just being able to open your eyes to different opportunities in the world of real estate. And, I want to go back there. You mentioned about talking about infinite returns. I want to touch on that a little bit now because I'm really curious to learn about this, and I feel like our listeners will, as well. But you often talk about it being the holy grail of real estate. Can you just kind of break that down about what that means and, how investors can achieve that through syndication projects?
Yeah. Well, when you're in an infinite position, it means you've got none of your own skin in the game anymore, and your returns keep coming in. And so when you have zero money down and you're getting a positive return, then you can't calculate that return on investment. So it's infinite. But yeah, so at first, that wasn't really my strategy at first. It was really just buy and hold and not be over leveraged and focus on cash flow. And then I started learning more about, well, the other way people talk about is the BRRRR strategy, right? Buy, rehab, rent, refinance, repeat. And so I started looking for some properties to do that. And it's funny, I thought I was failing at them all along because I couldn't take all of my capital out. I would buy a single family home, fix it up, get it rented, and refinance it in 6 months. And I'd be left with maybe 10 to 15% cash in the deal, as opposed to like, if you just buy a property, you're in it for 20 or 25% down, right? So it was better than that, but it was almost a failed BRRRR. But then, you just wait and let natural appreciation do its thing, and value goes up. And I've refinanced them again. There's been times when I've taken a ton of money out. And so really it's a holy grail, because any asset, whether it's real estate or crypto or, if you do sports betting, whatever it is, if you're able to generate a positive return with no money in, you're playing with house money. Well, it's infinite. And worst case scenario, if you go back to 2008, 2009, when people were losing their houses, well, if you got $200,000 of your money tied up in a house and you lose it to foreclosure, you lost a lot of money. But if you got zero of your dollars tied up into a house and everything hits the fan, the economy hits the fan, and you lose your real estate, well, what did you lose? Right? And so to me, that's why it's the holy grail. It's really risk-free, when a lot of people may see it as a little bit higher risk because maybe you're taking on a little bit more debt, It is a balancing act because you don't want to be in a position where you take on too much debt. You still want to have that comfort zone of positive cash flow so you can cover unknowns and capital expenses and stuff like that. But when you can add enough value and just let time do its thing, take out a bigger loan to pay you back, that it's the holy grail. There's no two
Yeah.
ways around it.
Yeah, I love that. And I guess I really haven't thought about it in that way, but how you just put it makes so much more sense of, I mean, once you have something up and running and you're kind of out of it at that point where, I mean, it's just running by itself, you don't have any money in it, you're ultimately not going to want to get rid of it. And it's just going to be that free cash flow that I know everyone ultimately is looking for whenever they get into real estate investing or really any investment strategy. And then along with what you were saying of you've been through the boom and the bust, I guess now how would you say that you personally navigate real estate market cycles? And I guess what trends are you paying attention to right now?
Yeah, I mean, right now, I think honestly is the best time to buy since 2009 to 2012. I mean, a lot of what I look at now, I compare to back then, and it's not the same, but there are similarities. And in 2008, the market really shifted. It made a dramatic change, right? The values peaked in the end of 2007. 2008 was a big correction. Out here, I think 2022, the fall of 2022 was similar to 2007. That was the peak out here, and then all of a sudden the interest rates started changing. 2023 was the correction. And so if you go back then, I mean, anybody that bought a property from 2009 to 2012 was buying at a time when it was tough to finance. It was tough to find a deal, and there was not a lot of people buying. Um, Everybody was scared. There was a lot of uncertainty, and people were thinking that the prices were going down. And so there wasn't a lot of people doing it. A lot of people that couldn't because the financing wasn't there. And so I feel like right now we're in a similar time period from 2009 to 2012. And there's a lot of uncertainty, a lot of people on the sidelines. A lot of people are like, oh, you can't get it to pencil. The rates are too high, this or that. And to me, it's just, this is why I'm trying to scale. I'm like all in. I'm all in with my own capital, and I'm the biggest investor in all of my deals. And I'm finding amazing deals because I'm not competing against other buyers. Like 2001, 2002, like I bought a few deals there, but like the prices were so ridiculous. There was just not much going on. And luckily, I was still like buying with my own money. So I was ultra conservative, and the deals that I bought are doing just fine because I still bought them low enough. But there was so many that I just walked away from, or you just couldn't make sense of. But right now, there's no bidding wars. There's no best and final for this stuff that I look at. And also, I play in a niche that's maybe a little bit different than you guys. I'm not buying big multifamily, so I'm not competing against big equity groups or institutional players. I'm not competing against super savvy buyers. I'm buying direct from like seasoned landlords who have owned for 20 or 30 years. They've done really well, and they're really just looking for an easy transaction. And I would say 6 out of the last 7 deals I've done have had seller financing at way more favorable terms than you get through banks. And it's just way easier. So I'm not bidding against people. I'm working out a deal with a seller, and I'm solving a problem, right? And I'm allowing them to continue getting what they love, which is cash flow. If you're a landlord and you're in the business, you love that. You don't want to get a $1 or $2 or $3 million payout and then have to figure out what to do with that and pay the tax gains. So I'm in a niche where I'm not competing against the big players, and I'm also not competing against the amateurs. So it's kind of a little sweet spot that I've embraced. But yeah, I mean, I'm all in. I'm trying to scoop up as much as I can. I kind of shared with you like the growth trajectory, and I think the other thing is really I still have a long-term outlook. So nothing that I do really has a short-term flip outlook. To me, that is just always ultra risky. I've done some flips. Some of them have been pretty damn successful, and I had one in process when the market was really shifting, and scared the shit out of me. Just one property, but I turned it into a rental, and I'm cash flowing really well on that. So I think with the right outlook and the right expectations, if you believe that real estate is a good long-term investment, why wouldn't you be buying right now or trying to make deals right now?
Yep. No, I completely agree. And I just have a question on top of that too. Like you said, from, I guess 2024, just the amount of growth that you've been seeing personally in your business. How are you structuring these deals? Are they more 506B, 506C? Is it a little bit of both? Could you fill us in a little more there?
Most of my deals are JVs, and so it's either just with friends or family, and then I'm doing some with like smaller equity groups, and just ultra high net worth investors. So like usually those people will put in $1 million or more in a deal. It makes it nice and easy. I do have one 506C for a 24 unit that we bought. I wanted to open it. I wanted to have a deal that we opened up to, accredited investors. So we do have one available like that at the moment. But most of the stuff that I do is joint ventures, and it's not really something that we can offer to the public.
Mm-hmm. Yeah, I know that's something Aaron and I have trying to been balancing. And, we started out in the 506C world and contemplating throwing ideas out there of whether or not we should open a 506B account and go that route. I just kind of wanted to get, I guess, some of your, feelings or opinions on that. So I appreciate that.
Yeah, I haven't done a 506B. The other ones, they're not even that. They're just joint ventures. There's just me and one or maybe a few people involved, where we have one significant capital partner. And then I'm the operator. I'm the deal guy. I find the deal, I manage it, but it's really like, they're involved in the decisions and so on and so forth.
Mm-hmm. Yeah. I guess going from the GP standpoint, whenever you're talking to these investors, either if they're entrepreneurs or professionals that are sitting on that active income, what's your advice to get them to start deploying that capital into your syndication deals? Or like, what's just been your way of getting them off the sideline and into those deals?
Yeah, that's a good question. I'll be honest with you. I'm a horrible salesperson in terms of real estate investment, honestly. And my standpoint is, it's not my job to turn somebody's mindset around. Like if they think their money's better off in the stock market or their 401k, or they've done things a certain way and they're comfortable with it, like that's okay. I really don't have the time or the bandwidth to try to turn people around and say, hey, this is why you should go all in on real estate. That's not me. I tend to just attract and work with people that already believe similar beliefs that I have, and that already believe in real estate, and we just sync up. You know what I mean? And that's really been what works for me. I know it's tough. There's a lot of people on the sidelines, but I'm just not the type of person that's gonna take somebody and twist their arm or try to shift their mindset. Some people are more on the education side and want to teach people about real estate if they're not already in it, but I just don't have the time for that. You know what I mean? I just want to work with people that I like working with and believe what I believe in. And that's it.
Yeah, that makes sense. And I feel like that makes it easiest to really just to keep all, Aaron and I talk about this a lot, just making sure everyone's interests are aligned. And if you pull somebody from, their 401k or the stock market, and they're maybe a little on edge or just quite unsure, I feel like that just starts to maybe bring in some other problems. Whereas, if they weren't even involved in the first place, it helps kind of cut some of those problems right at the head of it. So I feel like that's really good advice there. But I want to ask you now, let's say maybe a newer investor is coming to Aaron and I, a passive investor who's looking to evaluate syndication deals properly. What is something that you always like to highlight or refer to maybe somebody that's new and wants to learn about syndication projects?
Yeah, I guess the saying, it really is that when you're considering a syndication as an investor, there's a few ways to look at it. And what is it? They say the asset class is the horse track. Am I getting that right? But the operator is the jockey, right? And so I guess the general mindset in investing is you bet on the jockey, you bet on the operator. from one deal to the next, there's going to be some nuances, but a great operator can make a bad deal great, and a bad operator can make a great deal bad. And
Yep.
so that would be my recommendation, really, is you're betting on the operator. And if you stick with that focus, that might help clarify some of your decisions. And I will say, I invest as an LP with another operator through my IRA, because you can't use your IRA money to invest in your own deals. And that's the mindset that I took. I mean, all of my IRA money is with one operator. And I mean, I do believe in the asset class that it's in, but I also fully trust the operator. And I didn't have a prior relationship with them. He wasn't friends and family or anything like that. But I invested in one deal, and after some time went by, and I liked how things went, and I continued to invest with them over several years. And so that would be my advice to anybody that's considering making an investment.
Yeah, and I think that really plays into, I mean, what myself and Jacob have been doing. Of everyone that invests, they invest in people that, like you said, they like, know, and trust, and ultimately have that common determination of what they really want to do with their investments. And I think for us, it's just been huge of trying to find like-minded individuals, because I mean, like you said, that's the people that you don't have to pull off the sidelines, or you really don't have to do a whole lot with them. I mean, if they have the same strategy in mind and they're just as confident as you're going to find people that want to invest in deals. And also you're going to find people that have invested in deals with other operators that you might not have even known of, or not even seen any of their projects. But then you run into people like that who you then end up running into the best GPs, who the best sponsors. So for us, that's been our biggest thing that I think we've noticed over the last year and a half or so, is through the connections we've made, we wouldn't have even ran into some of the best people that are out there in the game right now. And we're just lucky to know them. And then I guess maybe one of our last questions, if you were, let's say, mine and Jacob's age, late 20s, maybe some people who had just started a real big boy job and starting to get big boy money and are unsure to do with, I guess, what would you do differently now, looking back at it, starting over?
I've thought about this in terms of myself. Like, a lot of times you think, if you could talk to your younger self, what advice would you give? And, in my 20s, man, I was so conservative, and I would just tell myself in my 20s to take bigger risks. Honestly, I was so conservative for so long. I feel like it held me back. And also partnering, in real estate, and leveraging other people's expertise, opportunities, deal flow, whatever it is. I never realized you could do that. And so I had the mindset of doing it all by myself. And I also had the mindset of, well, I didn't come from much. So I came from the survival mindset, and every dollar that I made was like survival and saving. And so if I could go back and do it all over again, I would be on the hunt for more strategic partners much early on. I would be on the hunt to get in rooms with people that were already where I wanted to go. And I'd be investing in getting in those rooms, and I'd be taking more risks. That's for sure.
I love that. And that's, kind of similar to Aaron and I's story when we first got into it. Obviously, it's just him and I. And we quickly found out as we were going through the process, we were trying to underwrite properties, trying to do due diligence, trying to go through the whole process. And we looked up, and there's only so much bandwidth that Aaron and I can really pull from to, complete a syndication project from start to finish. We knew quickly that we're going to need, some more support, more partnerships. And that's essentially the route that we ended up taking, going the route of being a fund-to-fund manager, which I feel like is a really great entry point for Aaron and I to, take a step into the arena with some of the big players and, get ourselves out there. So I love that. And I guess finally, as we kind of wrap our conversation up for today, Pete, I just want to give you the floor here to connect with our listeners. If there's anything else you want to mention about, where they could find you, how they can connect with you, maybe some latest projects or deals that you have coming up, feel free to, I guess, highlight some of those things.
Yeah, absolutely. If anybody wants to connect, you could look me up on any social media platform. Look up my name, Pete Schnepp. Go to our website, assetstreamproperties.com. From there, you can see, any open deal that we might have at the time. I've written a couple of books, co-authored a couple of books. You can get a free download there. And there's a number of ways you can connect with me. Just look for Pete Schnepp or Asset Stream Properties.
Awesome. Well, I feel like, Aaron, this is a pretty decent spot to wrap it up. I don't know if you have any other questions or things you want to say, but Pete will make sure in this video, I guess in the description, or Aaron's the editor here, so he'll kind of take control of that. But we'll link some of your information and where to find you at as well. That way, our listeners can connect with you that way. So we appreciate it, and we hope you have a good 4th of July. And thanks for coming on.
All right, guys. Great seeing you. Take care.